weaker yen or a weakened currency in general tends to make your exports cheaper.
Give us the overview. I mean, how has that happened?
If you look at real rates, I mean inflation adjusted ones, it's still profitable. The US the real interest is still higher than the Japanese one.
Tariffs. Of course, we have to mention tariffs.
You cannot just take a specific individual example and just try to replicate it.
According to some people who have kind of monitored Donald Trump and his interest in tariffs, he originally gets the idea from Japan and he thinks like, oh wow, that's great, that's a perfect, we can do that.
Yeah, let's do the same in the States. Yeah.
Hello traders and welcome back to Exness' series of podcasts. Last time we discussed 2025's military and trading battlegrounds. We looked at how wars can influence havens, indices and other instruments. Now today we're going to be talking about revenge of the laggards, Japan and the yen in 2025. And if you haven't done so already, please subscribe and turn on notifications so that you're always going to be aware immediately when there's a new podcast uploaded. I'm Michael Stark, Financial Content Leader, and here with me today to give his opinion and insights is Andreas, Themistokleous, Trading Content Specialist.
Hello Michael, it's nice to be here.
Thanks very much for coming. And overall, right, if we're talking about Japan and the yen, one of the last central banks to start hiking, and the yen overall has performed really quite poorly against most currencies since COVID. So give us the overview. I mean, how has that happened? Like, how has inflation and other things been different in Japan compared to many other countries? What was going on around the world?
Yes, that's true. The Bank of Japan was the last of the main central banks that started hiking after the COVID crisis, if you want to call it that. Now, inflation in Japan is closer to 2 to 3%, right, in the last 3 years or so. So inflation is picking up, which is not normal for Japan's standards.
And they're probably going to continue, right, to hike, the Bank of Japan, at least to some extent. Okay, so And the yen in general has done, really quite badly. I mean, it's gone from about 100 yens to the US dollar around the time of COVID, or I mean, that was like the low for dollar yen was around 100. And I mean, it's held for some periods above 160. But then that's not all bad. Because with Japan, given how its economy is structured, then it means that its exports, which are finished products, are effectively cheaper, right? So it's not all bad.
Yeah, no, a weaker yen or a weakened currency in general tends to make your exports cheaper for other countries. So that's quite beneficial for the country that has the weak currency, in this case, Japan.
Yeah, and yet the imports are going to be more expensive, so potentially that causes problems. Yes. Since I suppose the particular thing to highlight now, and I think one of the things that might challenge the narrative of high inflation in Japan is price of oil recently. Since generally speaking, oil has made pretty strong losses so far this year, and actually for the last couple of years has been in a more or less consistent downtrend. And I think that's significant because within the range of about a quarter of the value of Japan's imports is some kind of mineral fuel, including oil.
Yes, it's around 23%, I think.
Yeah, and yet that's declining because now that we have more electric cars and we have various other different solutions to replace oil and to replace petrol in various different things, maybe that's going to decline in importance. It's just something I think to highlight, and that's why I think it's possible maybe that inflation in Japan has actually peaked. And it might start to come down. We might only get one more hike this year. But let's not speculate too much on that, right? Yeah. Tariffs. Of course, we have to mention tariffs. And I mean, I think one of the things that this is interesting, brief digression, is that according to some people who have kind of monitored Donald Trump and his interest in tariffs, he originally gets the idea from Japan. Because in the 70s and the 80s, Japanese government really wants to encourage the auto industry. So it slaps these massive tariffs on American cars coming into Japan, and the USA doesn't do anything. So they kind of capitulate, as Donald Trump might say, and that makes it very difficult to sell American cars in Japan. And he thinks that, oh wow, that's great, that's perfect, we can do that.
Yeah, let's do the same in the States. Yeah.
And yet the cultural context, of course, is different. And yet now, of course, Japan is not particularly being targeted, right? But there are some negotiations ongoing.
Yeah, there are some negotiations ongoing, but again, it's what you mentioned earlier. You cannot just take a specific individual example and just try to replicate it, right? Because there is a lot of difference between Japan and the USA. The main being cultural differences, right?
Yeah.
So it might work, it might not. Time will tell. We'll see what the final trade deal between the US and Japan might be.
Yeah, but at any rate, I mean, certainly that's not something really that we're focused on right now. I mean, I don't think there's a big focus on like a disruption of trade between Japan and the USA, which is, I mean, in the grand scheme of things, it's not really like hugely important in the same way as it might be between the USA and China, for example, right? So let's think a bit more about monetary policy specifically and how that affects the carry trade. Since 2022, when the Fed like really hiked hard, then the carry trade has come back into focus, especially with the yen as the counter currency. So tell us a bit about that. What do you think about how that has developed and evolved recently and how it might continue?
Yeah, so carry trade is when you borrow in one currency to buy another. Mm-hmm. So when you borrow, for example, the yen, when it is low interest rate, and then buy, for example, the US dollar or euro or pounds or whatever, because they have higher interest rates, right? So essentially that's what carry trade is. Yes, it got affected because of the hiking of the Fed, and we've recently seen the Bank of Japan slowly starting hiking. You know, it's currently, I think, 0.5%.
Yeah, that's right.
But in the US, it's like 4.7, 4.5, somewhere around there. So again, it's still profitable, inverted commas, to do carry trade operations. So, and even going forward in 2025, the current expectations of the Fed cutting rates is three cuts, somewhere around there. So from 4.75, it might go down to 4, for example. But on the other hand, from the Bank of Japan, I don't think it's going to get higher than 1%, for example. So still, if we see, hiking or cuts or, what is going to happen with monetary policy between these two countries, I do think that carry trade might still project into, 2026 at least. And then we'll see what happens.
Mm-hmm. Yeah, no, that makes some sense. Yeah, and the probability also of both changing, of both the Bank of Japan hiking and the Fed cutting, has generally decreased over the last 3-4 weeks or so, approximately. Yes,
and also if you look at real rates, I mean inflation adjusted ones, where you also deduct inflation from the rates and you have the real rates, it's still profitable to do carry trade. I mean, the US interest is the real interest is still higher than the Japanese ones.
Yeah. Mm-hmm. And even if that situation is to change significantly, then of course there's various other currencies that it works with. I mean, traditionally you have the Australian dollar, you have the New Zealand dollar as well, but we don't necessarily need to look into much detail at these ones. Mm-hmm. And also about tariffs, if you would like to find out more information about tariffs and how it's affecting Japan and generally the sentiment on this relationship, then please click on the link in the description to go to the article on the blog, and you can read more details there. So, yes, I think let's look at some charts. And I think the main chart that I would like to look at would be dollar yen. And that's not to say that it's not important to look at some of the other ones like the, Aussie dollar against yen, for example. But dollar yen, I think, is something like that's particularly important to look at, especially what's going on recently with the dollar.
Yeah, for sure. The dollar has gotten some strength recently, mainly because of, risk premium or tariff, involvement getting softer, especially after the deal that we've seen recently with the Chinese government. So the pair is currently in a correction phase. It rebounded from the lows of around 140. But I do believe that for the short term at least, we might see some projection of the bullish rebound that we've seen recently going forward. And probably we might see some retest around the 150, which was also the previous high there in late March. For the short term at least. Personal opinion, not investment advice or anything. That's just my personal view, right?
Yeah, of course. And it also depends on various other factors, including data. You know, it depends on what we're getting from the NFP coming up, and it depends on what we're getting from American GDP, and various other things. Okay, so that's a great insight. Thank you very much, Andreas, for being here, and thanks for giving your opinion.
Thank you very much, Michael.
And thank you also to our viewers. And please remember that if you didn't already subscribe and turn on notifications, it's a good idea to do that so that you can be notified and aware immediately when the next video in this series is uploaded. Thank you for watching.